All right, so good day, everyone, and welcome to Think Africa podcast. All right, proudly powered by Cratadel Innovation Limited. So today I'm going to be your host. My name is Enoch Bayode, and if you're online and you're not in a noisy place, you can just unmute your mic and say hello. I think this is the third edition of Think Africa podcast we'll be having. So, and some of us, you were with us when we started, and we had the first edition. So this is the third edition, and if you're not in a noisy place, you can just say hi to the whole group. So let's hear from you. Let's hear from you. I love when we have intelligent minds together like this to have intelligent conversation. And trust me, today is gonna be one of a kind, something that I've been looking forward to. So if you're not in a noisy place, please let's hear from you. Just say hello, just say hi. Let's make it lively and interactive. Let's make it lively and interactive. We're starting now.
Hello.
Oh, good afternoon, Mr. Priest. It's good to see you.
Yeah,
Good to have
thank
you
you.
on this call.
Yeah, thank you.
Hello, good afternoon, everybody.
Oh, good afternoon, Miss Amarashid. Nice having you on the call.
Thank you.
Yeah, good afternoon.
All right, good afternoon, Mr. Gbenga. It's nice having you on the call too. So I think a lot of people are joining now. So and our guest will soon be joining us on this call. So, but before then, I would just like to take us through um what Think Africa podcast is all about, the initiative behind it, and the um, company that is powering, this initiative. So, Think Africa, uh, it is an okay. Let me quickly admit people in. So, I'm just going to introduce the company first, then I'll move to the initiative. So, Think Africa is an initiative that is powered by Cratadel Innovation Limited. All right. So, Cratadel is a Pan Africa technology and innovation company focused on designing, building, and scaling technology solution and products that address Africa um, that address Africa real world challenges and create opportunities for global impact. So what these companies all focused about is driving innovation that address Africa's specific needs. All right. So we are not creating solution for people that we don't understand their pain. So we are creating it for Africa and it is by African, and the vision is to transform Africa into a global hub of technological innovation and entrepreneurship. All right, shifting the continent from primarily consuming global solutions to producing world-class solutions that scale globally. So our mission is to design, build, scale technological solutions and products from Africa right here that address real world challenges and compete in global markets. All right. So, and we do different stuffs. There are many things that we do. We build products. All right. We design and develop technological products. All right. Um, we build technological solution. We deliver global technological products, meaning that we work with organizations to understand maybe their pain or where they are having bottleneck. Then we provide a solution for them, and these solutions are developed by Africans because everyone in our company currently we are Nigerians, and we are looking forward to expand that team to Africa. All right, that's our goal. So we build and support ventures. All right, and our position on this, or I don't want to call it our motto, but our position is fostering innovation from Africa by Africans. All right, fostering innovation by African, from Africa by African. So keep that in mind. So Think Africa is a flagship movement of Kratadel. All right. It's one of the movements, it's a major movement. A major movement in this company is Think Africa. All right, because we look at the state of Nigeria. Let's start from Nigeria now. We look at the state of Nigeria. The future we are hoping to build cannot be built by youth or young mind that don't understand what leadership is, that don't understand what building a product is, that don't understand human relationship. You don't even understand how to think critically. All right. So when we look at this issue, it's not rebuilding Nigeria and the future we hope to see, all right, or that we hope for is not a one-man job. All right. In fact, I believe that we need to go back to secondary school and reorientate those young minds there, because these days youth these days are more concerned about conversations that are not really intelligent, and the value system of our community, our cultures are already shifting. Now we celebrate nonsense online. All right, we don't celebrate intelligence as it ought to be any longer. So, and that is why we have the Think Africa initiative from our company. So, and there are different expressions of Think Africa. We have the Think Africa community, we have the Think Africa podcast, which we are having now. All right. We have the Think Africa Builder Circle, we have the Think Africa Boot Camp. All right. So all these expressions will be made like they're going to be coming more into limelight as time goes on. But today we'll be having the Think Africa podcast. And what is this podcast all about? It's a platform for intelligent conversation. All right. Somebody type in the comment section intelligent conversation. The fact that you are here means that you have the mind for intelligent conversation, actually. So, intelligent conversation. All right. So, this podcast is a platform for intelligent conversation that challenge, you know, conventional narratives, expand perspective, explore idea, innovation, and opportunity across different fields. Talk about technology, entrepreneurship, the society, all right, and other relevant fields in Africa. All right. So although we're starting with Nigeria, all right. So if you're excited to be here, you can give me an emoji. Let me see if you're active. Let me know 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 if you're active. All right. So that being said, so we're gonna be moving into the real deal now. Our guest is already with us on this call. So I'm gonna do a brief intro, then the conversation gets started. And mind you, this conversation is being recorded, and we're gonna have it being uploaded on our YouTube. All right, after this section. Okay, just a moment, please. All right. So understanding the stock market. So we're going to be learning how market basis insights, and how the market works majorly. All right. So the next slide. So, like I said earlier, I'm going to be your host for today. Um, a brief introduction. My name is Enoch Bayode, and I'm an AI engineer. All right. I design and I build AI products. All right, across different sectors. Talk about energy. Talk about oil and gas, e-commerce, and communication. All right, build multilingual chatbots. And being an AI engineer is not just limited to building chatbots. There are different AI products I also built to automate business workflow and all right, and AI systems. So, and beyond the technical work, and I'm the CEO and co-founder of Crackadel. I don't run Crackadel alone. I have a wonderful team, all right, and they're also on this call. Shout out to my team, actually, all right. And I'm also the host of Think Africa podcast. So I'm gonna be your host for today. Then let me introduce our guest. So our guest, well, our guest is more than a friend to me, actually. I can call him a brother. He's a very awesome person. So let me just give you a run through of his bio. So his name is Mr. Ekundayo Damilare Blessing, and he is a stock analyst and investment research professional with a strong background in equity research, fixed income, market and macro analysis. He's also a first class graduate in economics from the University of Lagos. All right. Financial modeling, capital research. All right. Throughout his career, he has produced extensive market intelligence, developed valuation model for listed companies, and have informed portfolio decision and investment strategies. All right. He is passionate about financial literacy and investor education. Mr. Damilare is committed to helping individuals understand the Nigerian capital markets and make informed decision. Please, if you are excited, can you give I guess a round of applause wherever you are? Can you give me a round of applause wherever you are? All right, all right, all right, all right, all right, all right. So you can see that our guest is loaded. So before I continue, let me just add some people on the lobby to the meeting. All right. So we'll be looking at 7 distinct questions. There are 7 questions I'm going to be asking our host today. Our guest today. But before that, I would like him to give a brief introduction of what the stock market is all about. I believe he has a lot of things to tell us today, and we're going to be learning from his wealth of knowledge. So, Mr. Damilare Kundayo, you're welcome. You have the stage, sir.
All right. Hi, everybody, and good afternoon from wherever you are. For those who are not in Nigeria, good day. Let me just be safe on that. Yeah. So, and I hope we are all doing very well. And I would like to say a big thank you to my brother, Mr. Enoch, for this opportunity to at least share a little bit from my wealth of knowledge with others. And without further ado, I think you gave me like around just 3 minutes to give an introduction. So let me just delve right into it. So I'd like to ask, whenever you hear the word stock, what comes to your mind? You can use the chat box, anybody. When you hear the word stock, what comes to your mind first? Because stock is like a general term that we use for so many things. A good example is stockfish. So, so you might have heard stockfish before. So when you hear the word stock, what is the first thing that comes to your mind? Is it stockfish? Is it stock of goods and services? Is it different things? Yeah. But I'd just like you to know that what we are speaking about today is in the line of finance and the line of investment. So we are speaking about how we can understand the stock market. And when we are speaking about stock market, what we are literally speaking about is the equities market, shares, ownership of shares. And you would have heard from time immemorial people speaking about, oh, I bought shares. Even your parents one time or the other, they might have said, oh, I bought one shares one time like this. Maybe some of them have even lost their CSCS accounts and they are unable to even retrieve the share. They don't even know where it is anymore. But at least you've heard them say things like they bought shares. If not them, maybe their friends. So what ownership of shares or stock market literally means is or ownership of stocks literally mean is ownership of having a fragment of ownership of a particular company. So if a company, maybe a popular company, they divide their ownership into fragments that are called shares. And so people come into it and inject their money to buy a part of those ownership. That's the layman definition of shares. And so there is a market that controls the buying and selling of those shares, and that's what we call the stock market. And for the purpose of today, we would be focusing more on the NGS, which is the Nigerian stock market, right? So every country has its own stock markets, and for each of the stock market, they also have their own indices that track them. In Nigeria, we have our own NGS, which is our stock market. In Ghana, they have their own Ghanaian stock market too. In US, they have their US stock markets too. And all the stock markets have their different indices that track them. In Nigeria, the index that tracks our general stock market is the ASI, that we call the All Share Index. But I'll be speaking about that more the moment our old host begins to ask questions. But on a general note, I just want us to know that what we'll be doing today is for us to understand how the stock market works and how can we tap into it. How can we, own shares? How can we buy shares? How can we, sell shares? And how can we, grow our wealth? That's the end of everything. Because the reason why you're buying ownership of a company and selling maybe at a higher price or even buying for dividend is in order to be able to grow your wealth. It's not because you're doing a good for the company or because you just love the company and you decide, oh, let me just buy. No, it's because you want to grow your wealth and you want to increase your wealth portfolio. And so stocks or shares are one of the ways in which you increase your wealth portfolio. So I'll just revert back to the anchor today, or to the host of the podcast, to drop his questions. And I believe that the moment he starts asking questions, we'll be touching some cogent points that we need to discuss about the stock market today. I'm really excited and I'm looking forward to speaking about the stock market today. Thank you.
All right. Thank you so much, Mr. Dabalari. That was awesome. That was awesome. So, and I believe that already we are starting to learn. All right, that stock is not scam. It's not like what they call. It's not betting that just put money into and you just hope maybe the chart just goes up so that you can make some big amount of money back and all like that. It's not sporty bets. All right, so we're going to understand that today. So, the first question I have here, I think Mr. Damilari has touched a bit about it. All right, but now he's going to have the time to expatiate more. So, the first is the reality of ownership. All right, for someone listening who thinks the stock market is just a glorified casino, a casino is where you get there and play bets, with wealthy people and all like that. All right. How would you explain what buying a share in a company like MTN Nigeria or Apple actually mean to them in real life?
All right. Thank you for that question. And I think that the reason why I'm saying thank you for that question is not because I want to gather my thoughts, but it's because I think it's a good place to start from, and at least going deep into the foundational understanding of what buying shares really means. So, if, for example, you bought MTN shares, now what it means is that you are tapping into you're having a percentage of the worth of MTN. So in finance, there's something we call valuation, and we do that through different means that we used to do that. That's building models, going through different means, DCM, DCF, and etc. But those ones are not for you. It is for people that are working in finance. But the end goal of those calculations and big Excel sheets that we do is for us to be able to reach a particular number that we call we value the company as. So at the end of the day, after we calculate and we look into the financials, the profits that the company is making, the cash flow that the company is making, we will reach a level where we can value the company at a particular number. So we can say maybe MTN is valued at a market cap of maybe 5.6 trillion. Are you getting me now? So if we say MTN is worth 5.6 trillion, then there is now also a way in which we would factor everything in the sense that somebody can be able to own some percentage of those value of the company. So if somebody is buying MTN at the current price that it is now, which is around, maybe it is already well over 500 naira, right? So what you're saying is that if you're buying 10 of those shares, maybe out of 1 million shares that MTN is giving out, what you're saying is that I own 10 out of 1 million shares, or 1 million stocks that MTN owns. So literally at the foundational basis, what it means is that you are owning a part of the company. You are part of the co-owners of the company. That's what it means. So when they are looking at their books, and then they are looking at the amount that they are using to run the company, your money is part of the amount they are using to run the company. So it is different from a scam, or different from a casino, as you said, because this one, you are literally owning a part of the company. And that is why the reward for someone that owns a company is profit. So if you put your money, for example, you started a company and you put your money in there, in the company, what happens to the company when it makes profit is that some profits accrues back to you. So that's the same way stock market works, in the sense that when you buy a share, or when you buy a stock of a company, at the end of maybe a year, or maybe half a year, depending on how well the company performs, when the company posts revenue, or when the company posts profits, particularly profits, there is a part of the profit that returns back to you, and that's what we call dividend, right? So this is literally the reality of ownership, in the sense that you actually own a part of the company. So if you are using MTN now, and then you own an MTN share, that's good for you, because you are literally using the services of the company that you own. But everybody knows that the part that you own might be 0.0000001%, because there are some people that own like gigantic, ginormous, stocks in those companies. But at least, nevertheless, you still own some parts of the company. That's what it means. Yeah.
All right. So, looking at what you said now, so me buying stock is me owning a part of the company, although it might not be that much.
Yeah.
Maybe it's just a little part of it. And then, one of my curiosity about owning part of the company is that MTN is not giving out the whole company per se for shares.
Yeah.
It's just a percentage of it, according to my
Yes.
understanding. So, but what I also discover is that there are some, I don't want to call them elites or big fish in the market, that own a major part of, MTN, for
Yes.
example. But the one we just have on the stock market is just the one the masses try to, cut. It's just like throwing a piece of bread to the masses and let them share those pieces. And this is just my thought. And I also think that there are some people, that are like the big fish that own a bigger aspect of the company. So how can one become one of those big players? Or is it possible?
Yeah, it is. If you buy more, right? If you buy more shares, so you would see people rising up the ranks in ownership, and of course, if you rise up the ranks in ownership, also you also rise up the ranks in decision making for the company. That's why you see people like Otedola, now Femi Otedola in First Road Co is the chairman, and then in even Geregu is the chairman. So what he literally means, I think he has sold his stake in Geregu recently, yeah. But I think what this actually means is that if you own a larger percentage of the ownership of your company, it means that you own higher levels of decision making. That is non-negotiable, right? And you can increase in the level of ownership that you own by just buying more. But of course, for you to be able to buy more, you have to, bid higher than the people that already own the price, so that they can be willing to relinquish their ownership of the stake even to you. So that's how we place it. Just like normal market, you see a company and you feel like, oh, I want to own a higher percentage of this company, and then you feel like, okay, now let me go and make a bid for maybe 50 million shares, and then you go directly to them, you speak to them, oh, I want to own 50 million shares. Because when it comes to big numbers like that, you can't do that on all these third-party apps that we have now, because that is those third-party apps are the ways in which we make it more democratized for everybody to have access to buy stocks, in which with your 5K, with your 10K, you can come and even own some part of the shares. But when it starts getting to big numbers, you can't do that through Bamboo or through AfriInvest or through others, apps, investment apps. So you have to have a formal, formal contact with them, reach out to them, and then bid higher for the price. And then, yeah, you can get to a high stake of ownership in the company if you have the money to buy.
Wow, I think that is plain. So the third party app are for the masses. So we all know where we belong now currently. All right. So, and my advice for everyone here is strive to be among the big fish that can make decisions. All right. Okay. So the next question. So this is more on the mechanics of price movement. All right.
Okay.
So we see stock prices jump or crash on the news all the time. Sometimes you just wake up or you open your Bamboo and you see that MTN is no longer maybe 820, it's now 740. All right. So practically speaking, what triggers this change? And for example, how does the Central Bank of Nigeria interest rate hike or an international supply chain issue directly affect the price of a stock we hold? All right.
All right. So I want us to understand this, that fundamentally at the fundamentally every market has the way in which supply and demand affects the movement of prices. That is fundamental. And whether in your normal goods market, your Ikeja market, is there Ikeja market? I don't know. Your Yaba market and everything, the way in which there is the role of supply and demand in fixing prices. And it is with the knowledge of that we now go into other things that you mentioned. So now there are so many factors that affect the rise or the fall of prices. And that's why many times when I tell people and I'm telling them, advising them about investing in stock markets, I tell them, don't just invest in stock markets and then be a naive investor. You have to have knowledge about the things that are happening around the market you are investing in. Don't just invest and then say, oh, I just hope it goes. That's gambling. You just put your money and expect. You have no financial analysis, because that's the difference between gambling and investing. Investing is you follow trends, you follow happenings surrounding the market. But for gambling, you are not following anything. You just put it there. You're expecting that, okay, let me expect that this thing is just going to boom, and then it's going to give me something, right? And I'm not saying it doesn't work sometimes. Sometimes you can put the money there and it works, but it is very okay for you to have a knowledge of whatsoever thing you are investing in. So now, the factors that affect, there's something we used to call financial analysis in equity research, and it is that whenever you're looking at a stock that you want to buy, you first go and check the financials, go and check the numbers that is posting. Like, I think from as a last month stroke this month, majority of companies release their H1 2026 reports. That's half year reports. That's June. So they started releasing their half year reports. Those things affect the market a lot. Imagine MTN posted H1 reports now, and then it was lost that it had. It did not make profits. It affects the sentiments of investors. So investors see that, oh, this is not a good investment for me, and they begin to pull out their funds. And it generally affects the outlook of the stock, and also how the stock moves in terms of the strength, for at least for the next couple of days or couple of months, until there's another thing that comes to now sway the market in another direction. So financial data is one of the major things that affect the market. And when I say financial data, profit, revenue, even cash flow, looking at the financial general, even there are deeper things we look at for people that work in finance, and then real stock investors. We look at PE ratio, we look at PEG ratio, we do in-depth analysis to look at some of all these things. PE is price to earnings ratio. We also look at price to earnings to growth ratio and other ratios like that. So financial, number one. Number two, there is a role of there is technical analysis too in stocks, even though technical analysis is not as profound or as popular in analyzing stock as it is in other markets, like maybe crypto, other markets like forex. I think forex, yeah, foreign exchange, yeah. So it's not as pronounced, yeah, but at least there's still technical analysis. They look at the trends of how the market has been performing. Okay, so it went up, candle and all those things. They look at it, it has gone up, it has a trend that has been replicating like this. I can foresee that this is going to go down. And so when you foresee that, it also affects the price, because everybody sees it, and then it determines whether they are going to buy or they are going to pull out their money from the stock. Another thing is now the general, economic factors, like the one you mentioned. Interest rates has a big factor to play in investment in any landscape. No matter the landscape you are in, whether you are in Nigeria, you are abroad, you are anywhere, interest rates of a company and the inflation rates, they are very, very important. So when you're looking at analyzing anything, the first thing you look at, especially with your economic factor, is your interest rate and inflation rates. If inflation is high, generally, there would be a move by the MPC or by the central bank, which our own MPC is central bank body, yeah, that's Monetary Policy Committee. For US is the Fed, the Federal Reserve, and for every other country, they have their own. So for Nigeria, it is the CBN. It's also the Monetary Policy Committee. They are the ones that determine where our interest rate is going to be. So if there is an increase in inflation, they are seeing an upward rise in inflation, there is an incentive for them to go and then hike interest rates. And when they hike interest rates, generally, it affects the stock markets and also affects the fixed income markets, because when they hike interest rates, fixed income markets, begin to have, an uproar, or an uprise, because investors begin to demand higher yields. I don't want to confuse you guys, but I mean, at the end of the day, there's a way it affects the stock market, and then what it does is that generally it makes the fixed income market, that's the bond and the bonds, the treasury bills, and all, it makes it much more attractive. And so, being that it's the same amount of money that goes around in the economy or in the system, many people now transfer their funds. There's a transfer of investment of funds or flow of funds into fixed income markets rather than the equities market. And so generally the equities market tank. And also there's a way in which it affects the numbers of a company, because when interest rates rise up, the meaning is that the rate at which you are borrowing money increases. So it increases the cost of borrowing. And when cost of borrowing increases, it affects each company. For example, maybe an MTN, when the cost of borrowing increases, then interest expenses increase in the income statement, and then it now feeds back into your profit. So generally, you will see that companies will now start making less profits in a time when there is increase in interest rates. You might not really understand fully, but I'm just trying to draw, the line between it. So I'm just saying there are ways in which these things really, really, really affect the price movement. So when all these things affect, it shows in the price. And that's why you need to always be in the market, always put your ears on the ground. Sometimes you don't have to have an in-depth knowledge like the one I have, because I have it because I'm a stock investor. A doctor doesn't really need to have all this. Oh, when this happens, it comes down, it goes on. But there are ways in which you can know them. There are sites that speak about the stock market. You can just generally once in a while just open your phone, go to Nairametrics. You can read up on what is happening in the stock market. You see an article on things that happen in the stock market, maybe for the week or for the month. Read up on it. It gives you an understanding. Or go to ProShare. You see ProShare even does something. They do stock picks for every week at the beginning of every week. So they did for 17th. That's Monday for the week. They will do for 24th again for the week. Like that. It just gives you a general understanding as to the things that are happening in the market, and those things can now decide and also help you to make decision on which stock to go into or not, because they actually affect the price of the stocks. I hope I've not confused you.
No, not at all. Not at all. For me, I'm learning and I'm writing. So, because I actually wanted to ask, but you already said it's close to the end of, giving the answer that you can check. We can check Nairametrics, for example, and ProShare. So it means that, so if I buy a stock now, so I can go to these sites and look at the update of what is going on. All right.
Yeah. So yes, you can get some knowledge about them, and some of them used to do analysis on each stock sometimes, but you don't generally see that them doing analysis on each of the stocks. Are you getting me? Telling us each of the stocks, but you can just open there and you just see a rundown of what's happening in the stock market. They can talk about the hot stocks and the stocks that are not performing well and things like that. It just helps you to have a knowledge of, oh, these stocks, when I read it, they said all the investment banks and investment companies, they labeled it a sell, so I need to sell, I must not buy. So it just gives you a knowledge. But if you want to know things about each of the stocks and just see, a little bit of each of the stocks, just go to the NGX website. NGX website has information about all the stocks. They won't give you analysis, but they will give you the numbers about all of the stock, how the stock has been performing for the past 1 week, or how the stock has been performing, for the past 1 month, 3 months, like that. You will see it you see the chart on NGX, and you also see it on AFX Kwasi. I love using that one.
Okay, can you give us maybe the name of this website? This the last one you mentioned. I don't think I really have the
afx.kwasi or kwaisi.org.
Okay. Can you help us that in the comment section? So I believe that we are putting this on everybody.
So
buying the next stock. So do your due diligence before you cry. I bought a stock this year, and after buying it, it crashed from, I think I bought it around 1,000 naira per unit or thereabouts. It then crashed to like 840. I was like, what's going on?
wow.
So, boy, later came back up, but I feel so. I would have waited for this thing to just come back, just bought the cheaper before it's, and get some profits.
I'm trying to paste hopefully you can paste on this. Okay, yeah. afx.org/ngx, because they cover top stock markets in Africa. So that NGX takes you directly to NGX markets.
Wow, that's awesome. That's awesome. So okay. So let's move to the next one. Now let's talk about currency. All right. Because on Bamboo we can see US stocks there too.
Yeah.
And some of us like I'm seeing Apple, I'm seeing Nvidia, all right, big. big figures, $400, $440 per share. Unlike a Nigerian stock that you can buy for maybe
Yeah.
150 area or thereabout. So as an investor in Nigeria, we can trade on the local NGX and buy into international market like the US. All
Mm.
right. But with currently fluctuation in mind, how should a beginner think about balancing local stock that pay naira dividends against buying dollar denominated stocks?
Mm. Very valid number. A very valid question. So the thing is, I like, this is just me. I like to um, advise people who are going into the stock market, especially as a beginner, to start with the NGX before putting the load of other, of buying dollar denominated stocks on their head. And this is why, because when you start buying dollar denominated stocks, yeah, there is a there is additional analysis that you need to start doing, which is to be following the currency movements with Nigeria, also with the dollar. I know that naira stroke dollar, although I mean I won't say it's been fluctuating too much recently. At least it's been quite solid. It's been quite stable over the past maybe 6 months now. It's still around 1.4 1.4. I'm just taking the largest bandwidth. Let's say around 1.3 to 1.5. It's still around that figure, right? Both on the NAFEM market, which is the official CBN window, and also our normal black market rates. So, but I'm just trying to say that majority of times, especially in times when there is no when there's a lot of fluctuation in the currency pair between maybe Nigeria and the dollar, it can give you additional work to start doing and be thinking, hey, okay, how do I price this in? Is this good for me? Is this not good for me? But one good thing about it is that I also like people I also like to ask him a major question, which is, why are you investing? Like, how long are you investing? If you're investing for maybe a year, right? You don't need to. You are investing for a year and above. You don't need to start thinking about it like on a frequent basis, because where the currency fluctuation comes to play is when you now want to repatriate your money back to naira. That's when the currency something, yes, that's where it comes to play, when you want to repatriate your money back. But if you're someone that wants to keep, just leave it there, invest for a long time and allow it to grow, and even your dividend, you want to keep reinvesting it back in the dollar, then it's fine for you. You can do the US market, because generally I think the US market is much more stable. That's one. But another good thing is Nigeria market is performing better than the US market for the past like 3 years now. Nigeria market is one of
Wow.
the best performers. Yes, it's one of the best performing markets in the whole world for the past maybe 2 years now. So if it's not part of, I'm not sure about the numbers, but I know it's doing better than the S&P 500. Well, because last year alone, the NGX market did, on the year to date from January 1 to December, it did about 51%, right? That's on the whole stocks. When you put all the whole stocks together, that's the ASI, all share index, and then you are now tracking it. So just on a general note, it grew by 51% from January 1 to December 31st. But the S&P 500 did around like maybe 17% or 16%. So that's like times 3 of the best performing index in the US market, because the US market has different indices. They have the S&P 500, they have the Dow Jones index, they have the Nasdaq too. But the S&P 500 has been their best performing index over the past over years, and it's also one of the most stable market index in the whole world. That's why when you read Warren Buffett's book, majority of things he talks about is about the S&P 500, because it's very, very, very reliable, and then it is known to always grow every year. But imagine the ASI is doing like times 3 of the S&P 500 last year, and this year it has even been on a growing spree, a bullish spree. It's not been doing crazily well, except for the last few months that it kind of calmed down. before it was doing like 50 something percent already, like by around maybe June, it was already doing more than it did for the whole year. That's Nigerian market, NGX, for the whole year, before it now calm down. So right now it's still doing like 55% or so currently. And we are not yet in December. And I'm not sure S&P 500 is doing those numbers. So why are you why are you going to Shokoto to look for something you can find in your Shokoto? Just invest, just find a good, stock, and then invest in it, and then grow your money. That's it.
Wow, I think we should celebrate the NGS market for that. Let's celebrate our whole.
Yeah.
Are we not happy that the Nigerian market is doing better? Let's celebrate that. Let's celebrate that. I think Africans, we need to learn to celebrate what we have. Actually, I think that's a good news. You mentioned a book by Warren Buffett. Can you tell us the name of that book?
I can't remember, honestly. I cannot
Please,
remember.
you
I'll
need
look
to help
for it.
us remember
Yeah, I'll look
so
for
that
it.
people can also, some people would like to check that book and
Yeah.
just read and understand.
Yeah.
Then S&P 500. I've been hearing a lot about this US stock. Is S&P 500? Is it Vanguard or something? S&P 500 Vanguard. All right. I think question will be on that later. Okay. So I believe everybody, you are putting down your questions. You're going to have time to also ask your question. So spotting the values now. Let's talk about this. How do you now recognize a genuine opportunity? All right. In a market, especially when the market is crashing and everybody is panicking. So how do you separate a dying company, from a great profitable company that is currently on discount? There are some stock, I think last year or thereabouts, that they are not that expensive. I think MTN as of last year January, I think it was around 400 thereabouts, but now it's 800. So, like, how will you know that this particular stock has the potential of becoming double within the space of 1 year or within the space of 6 months by just looking at it? Just like the way you look at it on Bamboo and you look at maybe the 3-month chart, the 1 month chart, the 1 year chart, the 5 years chart. They don't provide much information. Maybe it is me that doesn't know how to really read them, but for me, I feel like they don't provide enough information to make decisions. But then, how do you know that this particular stock in the next 1 year is going to be double of this? How will you recognize that kind of opportunity?
All right. So I think that the first thing I'm going to be very, very real with you, and it is that you cannot know definitively that, oh, this one will do 200%, because if we know, then everybody will buy it now. If we know, everybody will rush in and then we'll buy it. But I think one of the good things, like I said, it is not gambling, it's investing, and we work with trends. We work with data that we have, right? So one of the most important data that you have to work with, as I said, is the financials of the company. Always look at the financials of the company. If you see a company that is posting loss for the past maybe 5 or 6 quarters, it's just loss. You already know that there's something they are doing wrong in that company. And the company is probably a dying company. It's not as if the company just went down and will now come back again. The company is probably a dying company. And I'm not saying the company will die, but if they don't do something, the company will probably die. Right? That's why you see there were some stocks that were already like dead for years. I think, like, for example, Tantalizer stock was like dead for many years. When I mean dead, it was just going down. So everybody was like, oh, nah, I'm taking my money out of Tantalizer. And true to it, there are very valid reasons. Tantalizer was going through debt, like crazy debt, until a company came in and then did capital infusion, bought off the debt, and then revitalized Tantalizer. So now you see that even now, generally, you can see it. You've been seeing more Tantalizer, maybe outlets that are now reviving back little by little, right? And so it is now telling on the shares, at least from last year or maybe this year, Tantalizer shares have been growing a little bit, growing well and doing well. Are you getting me now? But as at that time, it was a dying company. It wasn't lying low so that people can buy low and then sell high. So I think you can look at the numbers. if the numbers say a whole lot about the future of the company. And another thing I would like us to know is that it's also good, right, to buy stocks when they are low or when they are going down. That's why I had to first say the first one, so that you will not go and buy stocks that are dying. You have to look at the numbers and be sure. But it's one of the best approach to buying stocks, just like every other market, is buy low and sell high, right? Buy low. Look at the stock market. Maybe you've seen that the stock has been low. People are not really talking about it, and you see that this company, they are doing everything right, but people are not talking about it. People are not buying it. It might just be the general sentiment, because sentiment too has a way in which it pushes stocks. When everybody is just talking about the stock, the more people buy, the more the price goes up. That's how it is. It is a bid and ask market at the end of it. When you look at the back of the NGX market, there is an NGX floor where they do the bid and the ask, and then it affects the price where the market actually trades. So that's it. So there's a back walk or a back end of the stock prices. Are you getting me? So it is a good investment strategy to buy low and sell high. But when you're buying low, look at the financials first and see, oh, this market I'm buying low, am I sure it's not going to go lower? It's not going to plunge deeper? Am I sure it has an upside, potential, or it is just going to continue going to the downside? So this is how you can know. But at the end of the day, you cannot know a company that is like going to do massive numbers, 200%, 300%. There's just a part of it that you just say, okay, I've done my analysis, I've done my research. I think I will just go for this company, and I believe that it's going to do well.
So you are saying now that it's just basically based on instincts after you have made your due diligence and research.
Yes, yes. But you still have to make your due diligence first. After making your due diligence, then you just go with your instinct and feel like, okay, I believe this is going to do. And also, there are also different things. Sometimes, for example, you might have privy information to, maybe a policy that would affect this particular stock. Sometimes it happens where you just see a policy and then you are able to connect the dot that with this policy, I believe this will happen, this will happen, this will happen, this will happen, and it will affect the future of this company. Is going to give a massive upside, and then you can quickly buy into it before people start getting there, right? And then you buy, and then it increases.
All right. So let's move to the next question. I just want us to be a bit All right, so everyone, I believe that we are getting along with today's edition of the Think Africa podcast. So, and these has all been an amazing section so far. All right, getting to learn a lot of things, a lot of sites now. I'm going to check after this meeting. All right. So, and I believe we'll also be doing the same. So, if you are learning, can you give an emoji? Give an emoji. Feel like this section is you're already getting a lot from this session, an emoji. Let's know, are you still there? And I hope you are putting something down. Means Nifemi Agbola is here. That's nice. Good to see you. So while we wait for okay, I think he's back.
I'm back.
All right, so we have 3 more questions, then we move to the audience question. So dodging the hype, I think you've talked about this a bit, but let's just go to it. Dodging the hype. All right, so new investors often fall victim for fear of missing out. So when a stock is trending heavily on X or Telegram, what is the biggest trap you see beginner fall into, and how can they spot bad investment disguised as a sure thing? So you can just briefly say one or two things about this. For me, I think he has answered this question, but
Yeah, even
let's.
me, I think I've answered. I think I've answered. Do your due diligence at the end of the day. Because if you don't do your due diligence, people will just and I also want to ask you a question. Have you guys noticed that stock? I don't know the word to call them now. Online stock analysts have reduced now for the past maybe 4 months or 5. Online stock analysts, they have reduced. Unlike when as it was in January, February, March, April, yeah. January, February, March, April, there were a lot of stock analysts. TikTok, people that they don't even know anything about stocks. Everybody was there. This is how I invested my 200 something. That was when the market was doing massive numbers. Even me, I was scared. I was like, NGX mark by me now. What's happening here? But now that the stock is now calming down, everything is now calm. You see that everybody, they have stocks. Nobody's talking about stocks again, except the people that actually have the in-depth knowledge about the stock. So that's how it is. Whenever a market is booming, same thing too with crypto. You see people are always coming out to talk about crypto when there's a new maybe a new cryptocurrency that is doing well. Everybody will start talking about it. They will become content creators. But the moment which is always happening, it is a cycle. Everything in life, I don't want to say just in life, but majorly in finance, every security has a cycle. There are cycles of bust, there are cycles of booms, there are bullish trends, there are bearish trends, and you always go through it one time or the other. In fact, majorly after a long bullish trend, the next thing you are expecting is a bearish trend. What's bullish? Going up. After a stock has been going up for a long time, you are expecting it to come down, because people want to take their profits. Imagine I bought something at 150 and people have started buying. It has now gotten to 300. When I'm not a thief, I'll say, oh, well, I want to sell. And the moment I sell, others still begin to sell, the markets will come down. So it happens. It's normal. But one thing that people used to fall victim of is this fear of missing out. And you have to do your due diligence. Sometimes, even me, I fell victim of this fear of missing out last year, in the sense that, and the reason I fell victim was because it wasn't my money. Someone gave me money that I should help I invest, and I'm like, okay, this money I have to do well, because I've been talking about stocks. I have to prove myself. So I saw some stocks that are doing well, and then the market was doing well. So I felt like, oh, nice. I mean, the margin of making mistakes is lower because there are more stocks that are doing well than the ones that are not doing well. So I just invested in one. And it was doing well. It got to a point the stock started coming down. Now, the stock was coming down for just maybe 3 days. So just 3 days. Those 3 days, I could not sleep. I'm like, hey, somebody else's money. My God. Jesus. So I just panicked and I sold. I sold that stock, right? The stock that had been going well before. So I invested in it maybe like today. The stock grew 2 days and then started coming down for like 3 or 4 days. So it was like I was at the tail end of people that gained. I just gained for 2 days and then it lost for like 3 or 4 days. So I panicked and I sold. So imagine I had already taken my loss. So the moment I sold like this, the market started going back up again. Something that I had already taken my loss. So I could have just, because before I entered the market, I did my analysis. I saw that, this market is still going to do well. But because I saw that it was losing, I quickly panicked and I sold. And then at the end of the day, the market calmed down and then started going back again. And it gained like that for like another maybe 5 or 6 days. Crazy gain, it's not 2%. It was doing like 10%. I said, God. And I could not go back and buy again. So I'll not lose again. So I just left it. So sometimes just have to do your analysis and stick to it. I have coconut head. Say, I've done my analysis. So whatever happens, I will take it. I will leave it for a while. Right? And then that's just how it is.
Wow, that's a nice one. I think we need to be very careful of the social media hype. All right, so many people that doesn't really know much about stock just come and make content. Social media has given everybody voice. The issue is that it gave foolish people voices. That's just the major issue. Foolish people. And when they say people are being foolish, it's not an insult. It's just that they lack wisdom. It's very simple. So. So, okay, let's go to the next question. So, protecting your capital now. This is more like risk. All right. So, the risk management sound like a term for Wall Street bankers. There is a movie like that, Wall Street. You can go to see it. So, but it applies to all of us. So, if a listener here has only 50,000 naira to invest right now, How do they protect themselves from losing it all? All right. What does diversification actually look like for someone on a budget like this, 50,000 naira?
Okay. So diversification is, I mean, I'll confess, I thought I was going to have like a time to talk, right? And then just I don't want to use the word sermonize everybody and talk about the stock market, but I think I like this better because all the questions you have asked I've cut across my notes that I prepared, and then it's already speaking to everything I was planning to talk about. So diversification is one of the ways in which you protect your portfolio from risks. And diversification doesn't only mean diversification within stocks. There's also diversification outside stock. But because we are speaking about the stock market, so let me just keep it to stock market, right? So whenever you want to invest an amount and you have already decided the amount you want to give to stocks, right? When I say diversification outside stocks, I mean there are other things you can invest in. You can put a particular amount of the money you want to save or invest in high net worth savings accounts, put some particular money in mutual fund, some particular money in fixed income, maybe treasury bills and bonds, and put some in stocks, right? But because you are talking about stocks, let's imagine that you have done all those ones, right? Now 50,000 is what is coming to stocks. Even in stock markets, you must learn how to diversify, right? And diversifying, especially when it comes to having a budget, like a low budget, like 50,000. 50,000 is not too low. I mean, if you have 50,000, you will go But I mean, so if it comes to at least low amounts, that is not all these big amounts, you might tend to maybe over diversify where you're not putting 5k. No, that's not how it is. But at least I think with 50,000, you can find about 4 to 5 stocks and then invest in very well, right? And this is how you can do it. First of all, you can diversify based on sector. There are 5 major sectors on the NGX. Number 1 is the insurance sector. Number 2 is the banking sector. Number 3 is the consumer goods sector. Number 4 is the we mentioned insurance, banking, consumer goods. There are 5: insurance, banking, consumer, industrial goods, and what's the last one? When I remember, I will let you know. Consumer goods, industrial goods, and banking, yeah, and insurance, right? So, and then all those are the 5 major ones. There are also other ones like telecommunication. Those ones are under their subsectors, under maybe industrial goods and all. Now, you can look at those sectors and then decide, oh, I'm going to invest I'll invest in a company under industrial goods. I will invest in a company under banking. I invest in a company under industrial goods. I invest in a company under, consumer goods sector. I invest in a company under this. So that because there are some policies that the government will roll out that will affect the whole sector together. Like remember, was it 2 years ago when the CBN rolled out a policy of a capitalization policy for all banks? They also did it for insurance companies too, where they're like, you have to have at least 500 billion to in your as capital that you have to raise, which has to be fresh. It doesn't have to be retained profit. You have to raise it afresh if you are a top bank. So something like that. When they release that report, it will affect all the stock market. Generally, everybody will price it in. And so if all your investments are in the banking sector, if it is a positive, all your companies will go. But if it's a negative, everything will just went and then tank, right? So it is good to diversify based on sectors, and also it's also good to diversify based on companies. You shouldn't put all your eggs in one basket. That's an old saying and an old adage, and it still holds sway in our current generation, where you cannot just take all your money and put it in MTN. If MTN goes down tomorrow, what will happen? Right? So at least find different companies that you have done your research on and that are solid, that you can put your money in, and then I think you're good to go with your risk management if you can be able to diversify very well. Because if A goes down, at least B will go up, and if A and B goes down, at least C would either go up or remain the same, right? So that's just how it is.
All right. So you mentioned banking. Which other one? I think you mentioned some couple of industries.
Yeah, banking, insurance, industrial goods, consumer goods, and oil and gas. That's five. The five major ones.
Consumer goods too.
Yes. Consumer goods are the normal FMCGs that we interact with daily. All those Nestle, Cadbury, and Learn Africa that produce books and all those general ones. Oil and gas, we all know oil and gas, Seplat, Anadel, and those companies. We have insurance, general insurance, internet gains, M benefits, as AXA Mansard, and etc. like that. We have consumer goods. Okay, I mentioned that. We have banking. We all know them: GTCO, Zenith, First Co, Wema Bank, Fidelity Bank, and the likes. And so yeah, and the last one I can't remember. Industrial goods. Yeah, that's like high level industry companies like Dangote Cement, Boa Cement, and sometimes we sneak in telecommunications under industrial goods sometimes. Why some people have a different sector called telecommunications, so sneak it under industrial goods. We are that where MTN, Airtel, Afri, and then other stocks coming.
Yeah, great. That's great. So, our last question. So, if a listener here is feeling inspired and wants to buy their very first stock, maybe today, not even tomorrow morning, what is the first step they should take? And what is one golden rule they should write on the sticky notes? All right. There is that one thing that you always put at the back of your mind. So, what is that one thing that you always put at the back of your mind you want to invest right now?
Okay. So, if you want to invest right now, first of all, what you can do, they have made it, as I said, they have democratized the process. It's not easy for everybody to invest in stocks, and how you do it is through the investment apps. All these investment companies, investment management companies, they have their own app that has helped people to be able to buy. And so even with your normal carry wise that everybody has been using for like the past 6 years now, 7, to save money, they introduced stock investing last year, and so you can invest in stocks through your carry wise, right? You can invest in stocks through Afri Investor. You can invest in stocks through Afri Investor. You can invest in stocks through Bamboo. You can invest in stocks through RiseVest, iInvest, and then different apps like that. So now, what I think you need, honestly, you cannot invest tomorrow because you have to do your KYC. So first of all, you get the app, and then when you get there, you navigate through it. You would register. The things you need to be able to register: you need your NIN, you need your bank, a valid Nigerian bank account, you need your BVN, and then you would, and also I think the proof of address here, proof of address for where you live, or utility bill or something like that, right? So you do that just for your KYC. Then they will take maybe like 2 to 3 working days to do your KYC, and after that, your account is good to go. So when your account is good to go, then you go in there, go to the stock investment side, and then choose the stock you want to invest in. So for I think one of the things I saw on Kaiwise that I love is that Kaiwise has made it very nice. It says that apart from what every company does, where they have charts to show you how the company has been performing or how the price has been for the past few days, Kaiwise also now puts a snapshot of the financial data of all the companies. So when you click on it, you can literally look at the market cap of the company, look at the profits that they made the last time, look at their revenue, look at the snapshots, right? And you can even compare with another company. You can take MTN and compare with Airtel Africa, and then compare, and you decide, okay, this one made more profit, this one makes more profit, and then you decide, I want to invest in Airtel, I want to invest in MTN. And then you also go and check your chart and decide. So one good thing that they should write on the sticky notes and put on their fridge. Number one, learn to do your own research. Dior. It's not Christian Dior. It's like normal Dior. DYOR. Do your own research. So learn to do your own research. I know there's a place of reaching out to people, which is very good. Please reach out to people, because no matter how much you do research, I don't think in the next 1 week, no matter how much all of you do research, I don't think you can know the stock market as good as I do, to an extent, because I've been doing stock analysis for the past maybe 1 year now, right? So, 2 years now, yeah, for the past 2 years, in 2024. So, and that just puts it just speaks about the place of people who are doing like this on a daily basis. But I'm just saying it also works for you to do your own research by yourself. You can reach out to people for advice and say, oh, even me, if you reach out to me for that, we talk like that, I will not tell you go and buy MTN, because this is before you buy MTN tomorrow now and he now loses. You will now bring police to my own doorstep and telling me, if you were the one that told me to buy MTN, I will not even tell you to buy MTN. I will tell you, okay, so what stocks do you have in mind? Have you done your research? Those are the things I'll be saying. Because for even people that write normal investment materials and they make recommendations, they put it at the end of the day that it is not a not financial advice or something. And then you should do your own research. So everybody should learn how to do their own research. And you can ask for corroboration from other people that are very vast in the field, but do your own research and own your investment with your full chest. Whatever happens is your money. Nobody's going to beat you. So invest and then be fine. Expect the returns. And if it's a loss, cry and move on. Invest again. Go again. Start again. Yeah.
All right. So that was awesome. So own your investment, and if you are looking forward to ask question, or you need enlightenment, you can reach out to Mr. Damilari. I think he offers consultation, although I think it's not free. Yeah, it's not free. Nothing is free. So be ready to pay. Am I correct?
Yes, you are.
All right, sir. So please if you have question now, please kindly drop it in the comment, in the message section, or you raise your hand, but I prefer that you drop it in the message section. So right now, just give Mr. Damilari some time to talk on. Maybe there are some things that you feel like they are in your notes that we didn't really touch. So while we wait for the questions, you can just briefly run through those things. So, okay, we have one hand raised. Please, let's keep raising up the hands. Once we do the counting, we won't take more questions again. So please, if you have a question, just put your hand up. And while we wait for Mr. Damilari to run us through some of the things he has in his notes. All right.
All right. I think, as I said before, majority of things I have in my notes. I mean, kudos to our amazing host. He has been able to touch them. And maybe I'll just, let me check through my notes, please, and then see the other things that I've not spoken about. The allocation of portfolio has been spoken about. Okay, yeah. I just want to touch on the importance of compound interest in helping your investment group. No, now many people will be listening to us talk about investments, making our wealth portfolio grow and things like that, and they'll be like, okay, by the time I have like maybe when I make my first million, or by the time I have like 50 million in my account, then I can now start thinking of how I can invest. No. So there is huge gain in investing early. A huge gain in investing early. And the reason why I'm talking about this compounding growth is because this is the fundamental driver of investment. At the end of the day, is what makes your little amount to transform into something great. Is what makes your little amount to transform into something massive at the end of the day. So this is how compound interest works. It is that, for example, if you put 1,000 naira, or let me use 10,000. 1,000 is too small for my bosses that are on this call. If you put 10,000 naira in a particular investment, and you put it on a fixed note, stock market returns is not fixed though, but I'm just using an example. Put it on a fixed note, which is probably fixed income, treasury bills, and you're getting 10%, right? So at the end of the year, 10% per annum, that's in a year. At the end of the year, you get 1,000 naira on that 10,000. Now, where compounding interest comes in is that it doesn't mean you'll be getting 1,000 every year like that until when you are ready to remove the money. No. What happens is that that 1,000 now adds to your 10,000 and becomes 11,000. So now 11,000 is what you now invest for the second year, and then it now gives you, on the 10%, it gives you 1,100. That looks small. But imagine it is a million. You invested 1 million, you got 100,000 first year. right? Second year, it becomes 1.1 million. You now invest it, it gives you 110,000 at the end of that year. The next year, you are now investing what? Your 1 million plus your 100,000 plus another 110,000. That's 100 and 120. I mean, how much? 1 point. Can someone help me? 1 million, 100,000, 110,000. Well, that's 210,000. That's 1.21 million. Yeah, that's what you are investing for the third year. And then when you put it there on the same 10%, it now gives you 121, something like that. Then you will see that at the end of maybe 20 or 30 years, the amount you'll be getting will be way more than your imagination because you just put 1 million in a particular investment, and it is compounding for the next 10 to 20 years. So that's why when you see the rich keep getting richer, and because they have learned how to invest at the early stage of their life, in the sense that now, with every passage of time, there is greater accrual to their account. With the passage of time, there's greater accrual even to their investment account. So that's why this stock market investing is targeted towards you, it's targeted towards me, that as early as possible with your 5K. That's why we have all these stock investment apps. They have made it easy. The least you can invest is 5K. You can invest 5,000 naira. That some of you used to buy data and just invest, just put it there. And I won't say leave it, but just be checking in once in a while, follow with the market and all. Just be checking in. And apart from stocks, if your risk aversion is too high, I mean, if your risk level is too high and you are risk averse, you can go into other investment options. You can do a fixed income investment. You can invest in treasury bills. You can invest in bonds. Just put it there. That one is fixed. Whatever amount you put there is what you get at the end of the year, and then with your returns. So you can put it there and let it accrue over time. And then in the next 10, 15 years, you'll be grateful for some of the things that you have done early in your life. Yeah, I think that's just the only thing I will talk about for now. And for stocks, let me just treat this in. For stock, here are some things you should do before investing in any shares. Number one, choose your investment timeline. You must decide the timeline. Is it 1 year? Is it you want to invest? No. You want to invest and remove it on Friday, or it is a long-term investment. If it is, because it's this one that will determine the type of stocks you want to buy. If it is a long-term something, then just go for stable stocks and high-cap stocks over penny stocks. Number two, choose your aim and goal of investing. Is it growth investing or dividend investing? So now, I think I didn't talk about this. There are two. This is why stock market investing is very good, because there are two ways in which you can gain. You can gain through growth, through capital gains, or even through dividend. So what's capital gain? Capital gain is maybe you bought the stock now today at 10 naira, and something happened, maybe the market posed good numbers and everybody just buying into the stock. Everybody buys the stock. At the end of the year, the stock has gained to maybe about 19 naira or 20 naira. That's double of your money. So imagine someone that puts maybe 1 million there and bought it as 30 naira, 1 million. At the end of the year, the person has gained 2 million. Yeah? The person can sell. And when you sell, at the end of the year, you have gained 1 million. That's capital gain. But there's another part of income that you gain from stock market, which other instruments don't have, which is called dividend. Dividend is after maybe every quarter, or majorly after half of the year, or at the end of the year, when they release their financial statements and they record profit, they would distribute that profit among all the people that own the company. So some amount will reach you as dividend. Imagine they are paying maybe 15 kobo per share. So imagine you bought something that is you bought a stock that is like about 1 million naira, and they are giving 15 kobo per share. After they have factored in everybody that owns the share, and then they have decided that this is the amount we made as profit, we want to divide it. So we'll be giving 15 kobo to everybody per share. Yeah, you have 1 million. That is 150K that will enter your account, bam, like that, free of charge, without doing anything. You just see it, and because you have linked your bank account to your investment app, you will just see it. You just wake up one day and just see it and just smile, ha ha ha, and you move on. Nobody will know why you are smiling. You did not work for it. You did not do anything. That dividend returns, right? So that's just what I thought to just put there. Choose your investment timeline. Choose your aim and goal of investing, and then pick stocks in companies and industry that you understand. Learn to pick stocks and companies in industries and the sectors that you understand. I think because of time, I'll just stop there.
All right. Thank you so much. Thank you so much. So we're trying to wrap this up now. So I think we only have one question. Please, if anyone has have question, just please raise your hand. Our guest is here to answer your question. All right. So, Mr. Sam, please, you can go ahead and ask your question.
Yes, good afternoon. Can you hear me?
Hi, good afternoon. I can hear you.
Okay, thank you so much for the presentation and what you have told us today. Even though I came a bit late in the class. So my question is, um, during the course of investments, there's this thing I do check that I don't really know how it actually affects investment because I realize there are some stocks that are overpriced, like not
Yeah.
overpriced, they are overbought. Yeah, they are at their highest level. And the instrument I use is this PE ratio. And
Okay.
what I understand is that they say if it's greater than 40 or so, that means that the stock is overbought, that probably there's no more room for growth again. So it might not be a really good stock to really invest in. So I just wanted to clarify on that with the aspect of
Okay.
PE ratio and stocks that are overbought. Yeah.
Okay. So for PE issue, right? I think um I think that it is basically for comparison for me. This is how I use P ratio to determine if a company is overbought or not. Because P ratio literally means price to earnings, right? So it means the price that you're paying all over the earnings or the what's earnings now, the returns, the revenue that you're getting from the company, or the profit here, that's it. Price over earnings, right? So now I think one of the mistakes that people do in using PE ratio to analyze stocks is that they do not do it in comparison with other stocks that are around, that are in the same sector. So if there's anything I would like you to know is that don't just take PE ratio on a 0 and 1 basis. Some sectors have very high PE ratio. You will see it in all the sectors. When you check GTA, Zenith, you see all of them will just have the same. I'm just using an example. I'm not saying banking sectors, but some sectors just have specifically high PE ratio. So imagine you now take that one. You take a company in that particular sector and you decide, oh, this PE ratio is high. It's already overbought. I'm not going to buy. You are shortchanging yourself because you have not checked the PE ratio for other banking sectors or for other companies in the banking sector. Are you getting what I'm saying? So if whenever you're using PE ratio, try as much as possible to compare it with other companies that are in the same sector, and also compare it with so there is industrial comparison, that's some company industrial comparison, and there's also comparison with the previous years. So as much as possible, also try to do the PE ratio of the previous years, the last year, the year before, and things like that. Look at the trend of how the PE ratio has been. Maybe the PE ratio for before now was 13.1x, right? For 2023, 30.1, and 2024, 15.1x, 2025, let's say 16x. Then 2026, you are now seeing 40x. You already know that this is already overpriced. Let me run away. Do you understand? But in a case where you've been saying 15, 16, and this one is just around maybe 14 too, or it's still 15, 16. You think you should already understand that this thing is still, it's still well within the same scope that it has been before. So it's not really overpriced or it's not really overbought. But in a case where also you're now comparing it with maybe other companies that are in the same sector, others are giving like 13x, 12x, what do you call it, 12x and things like that, and you are saying 30x, you already know that there's something wrong with this company, and then you might want to just stay away because it is probably already overpriced. Are you getting me now? So don't take PE ratio, just don't take it on a standoff basis. Use it in comparison with other sectors and with other companies in the same sector, or with the same company but with the other years that it has been posting, or the other numbers that have been posting in the previous years. Do you get me? Did you get me?
Mr. Sam, are you there? Hello, are you there? I don't know if you can still hear us.
Yes, are you saying something?
Yeah, did you hear his response to your question?
My network, God.
Okay, you get to listen to it in the recording. Session is recorded, so when it is posted, you can go listen to that. So, do we have any more questions? Do we have any more questions before we call it a day? I have a lot of people on this call today, and it's such a privilege to have everyone here on the call. Thank you all for coming. So please do well to ask your question if you do have questions. And this is an open space for learning. All right. So you can get to learn one or two things here that would help you in investing in the stock markets. And they are bringing practicality into it. Maybe there's a stock you bought now and you are scared, maybe it's going to go down. You can ask questions. And personally, I think I have a question. Okay. There's a question in the comment section. He said, which one is more safer to invest in, stock market or crypto market? Since both have the possibility of diminishing and can rise back again. Using Bitcoin back in 2015, for example, this is from Temitope. All right. So
Let me answer just simple and short. So far, it is a proper market. There's no market that is there's no market that you say safer or not safer. Do you know that to some people they prefer investing in forex, like foreign exchange, like commodity currencies market rather, over whatever stock you people are talking about or not, right? But one thing you just have to understand is every market has the way they work, and so it depends on which one works for you or which one you like. That's why I also preach diversification. Try not to possible to touch every market, right? And then divide your resources amongst every market. But there's no question of which one is safer or which one is not safer, because at the heart of it all, it depends on which one you like and which one you are more conversant with. Now, generally, markets are divided based on their risk and returns level. Fixed income market is classified generally as a safe market because it is low risk, low returns. Mutual funds is medium risk, medium returns. Stock is still safely medium risk, medium return, but I mean, people classify it as high risk, high return because your market can literally, you can gain very well and you can also lose very well. Crypto is also part of the high risk, high returns. Forex is greatly high risk, greatly high returns. But look at it, for every investment, they have their risk part and their returns part. So if you are focusing on the risk part, we will say generally stock market is safer than the crypto markets because of the way the oscillatory movements. It can swing faster than the other. Do you get? But when you are looking at it from the returns part, the same way a company can a market can swing faster is the same way the market can swing in your own good and do well. and give you returns and make you, a lot of money overnight. So I don't think it's a question of which one is safer. It's a question of which one works for you, and then which one can you deal with the risk that is involved in it. And when you're able to deal with the risk, then you also be able to enjoy the returns that comes with it. I hope you got me.
All right. Okay. I'm getting thank yous. I think the person get the response correctly. So personally, me, I don't think I can really deal with the risk of forex like that. Well, then maybe when we have enough resources, we can try it. But now, nah. So okay, for me actually, let me just ask this practical question. UBA currently is just playing on between I think 14 naira and 42 naira thereabouts. I once bought it, I had to sell it off because it's not even moving at all, it's not doing anything. So will you say is a good buy or is a prospective chair to look into?
Okay. So I already told you people, I'm not going to tell you go and buy UBO or don't go and buy UBO. I'm not going to tell you
We
that.
get
But if we look at UBA was doing pretty well from beginning of the year until they went to go and do the nonsense that they did not pay dividend, right? So it really affected the trajectory of the company, right? It affected the trajectory of the company. But one thing is just that I feel like one of the major things that would move UBA in the next coming days or next coming months is their H1 reports. I don't think they have released, they've not released their H1 2026 report. So is their H1 2026 report that will determine how well the company is going to go in the next few months. I mean, I don't know. I've not done any deep dive into following UBA. Honestly, I'm going to be honest with you, into following this on a specific level or on a specific basis. So I won't be able to say whether I think their report is going to be favorable or not. But one thing I know is that their H1 report that is coming out in probably early September or I think it's early September that they're going to release it. That is going to be a major driver of the market. So you can now, I think I'll be able to clear a little bit of path for you. So you can now go and maybe deep dive and see with how they have been performing, is their report going to be favorable or is going to be, zero? And if it's going to be zero, you can go and say, good morning, Tony. What is happening to UBA? Thank you.
good morning, Mr. Tonio. Let's be careful. All right. This has been an amazing conversation for me, and I don't know about others, but I think the last close to 2 hours we just spent now has not been wasted for me. It's been resourceful. Okay. This is the last question we'll be taking. This is it advisable to sell gradually or all at once, especially when the stock is fluctuating or not balanced? So this is the last question we'll be taking.
Okay. If the stock is fluctuating or not balanced, the question, as I said at the end of the day, is why are you investing? I mean, how long? Why are you investing? One, how long are you investing? If you're investing for like a year plus, the fact that it's fluctuating is not like it's free falling or something. Shouldn't give you any problem. You should still. I will even say don't even sell yet, except you find a strong reason to sell. Just leave it. It's still fluctuating. It's going down. It's going up. That's how stocks will be doing. It will be going down. It will be going up. But the major thing is hopefully the going up it overrides the going down, right? But if you now find a reason to sell, right? If you find a reason to sell, you can sell. I think because it's not free falling, you can sell gradually. You can sell gradually and then see how it goes. Because maybe you have seen another better company that you want to put your money into. You can sell a part of it and then put the money into somewhere else. But don't sell and use it to eat, except God will not allow Sapa to hold on. But don't sell and use it to eat. sell and then put it in another investment or in another stock, yeah, you can sell gradually. I would advise sell gradually. But if it is like a free falling something and there are strong reasons to sell everything at once.
That if it's in a free fall, sell everything at once. Then there's this stock that is doing like as if it is magic. This Airtel stock. I don't understand. It didn't just going up
And it will
like
stay
free.
there. It will stop, it will go up and stay. Go up and
Yeah,
stay. Go up and stay.
go up.
And I think it's actually a very, very good one. Because at the end of the day, when you look at it year to date now, year to date has caused 50% to, on this year to date basis for something like that. And generally, the issue with Airtel is that Airtel is Airtel Africa, right? It's not Airtel Nigeria like MTN.
Nigeria.
MTN.
Whoa.
So that is the issue. So it really doesn't move. It does not move many times. It's either it's always there until one day. I don't know what always drives it. Then one day something will just happen. You just do 10% and then stop. To do another 10%,
Wow.
stop. So that is the major reason. But if it is, should you buy or not? I think you should do your research, and then if it is something you are fine with, you can buy it. Because I feel like the same way it is going up and it's standing, going up and it's standing. If it wants to come down, so that's how it will go. It will come down and stay. Come down
Wow.
and stay. Yes, that's how it will go. Come down and stay, come down and stay. So just do your research and then decide what you want to do.
All right. So thank you so much. Thank you so much for your time. Having you on this call has been wonderful and that's been insightful. Actually, that's been so insightful. And right on this call, I just like communicating with young mind. I believe that there are so many people on this call that are into different fields, photography, programming, and all. And I believe your time has not been a waste joining us on this call today because now you know where you can invest your money and how you can invest maybe your money for profits. All right. And this has been a very amazing section. So I want to say a big thank you to Mr. Damilare Kundayo. Like you've really opened our eyes to a lot of things today, and it has been wonderful. Thank you so much. And please if you can unmute your mic, can you say thank you to Mr. Damilare? For today, if you can unmute your mic, you can say thank you.
Thank you very much, sir.
Thank you so much.
Let's have more of that. Let's have more of that. Let's have more of that. I think we are young guys, we have vibes. So, and if you want to reach out to him, sir, I don't know if you can drop maybe your Instagram or maybe your Gmail. You may not want to drop your number, maybe your Gmail. And just suppose drop in the comment section for those that will want to reach out to you for consultation and all like that. So, okay, why that is being done? So, let me get this here too. All right, so this is the Gmail is right here. ekundayodamilareblessing@gmail.com. So please, if you want to reach out to him, kindly do that. He's gonna respond to your mail, and then you can do it to follow him on Instagram too. He used to talk about money, and a little bit of fun skits too that I used to see sometimes. Swallow your pride.
So I dropped the one that is only based on my money talks. Even though it's been a while I've posted on that, but at least I have an account just for money talks, and I think I will resume, speaking on that again. Yeah.
So okay, we'll be expecting more content from you because having the social media space filled with intellectual content is something that is very, very much important to this generation that we are now, and it's gonna be well appreciated. All right, so I just dropped the YouTube link, the YouTube channel where this conversation is gonna be posted, probably on Monday or by tomorrow. It's gonna be posted by tomorrow on Monday. So the full recording is gonna be on our YouTube page, and you can do well to just access it from there. Do well to subscribe, do well to like, do well to comment. All right, and we also have other amazing conversation like this on that same channel, and it's all free for now. All right, it's all free. I think it's going to remain free that way. All right, so um just do well to enjoy yourself with the content, and see what you can learn. So this is the end of today's podcast, and it's been so awesome having everybody around. So thank you so much, Mr. Damilare. We really appreciate you from Craftadel Innovation Limited, and the team, the entire team. We are saying a big thank you. Thank you so much. Thank you so much, sir. So really appreciate. So let's celebrate our speaker once again, as he'll be taking his, he'll
Thank you
soon be
so
taking
much,
his.
sir. Thank you everybody for having me, and it was really a pleasure sharing a little I know with you. Have a nice day, everyone.
All right. Thank you so much, sir. All right, and for everyone, so thank you for being part of this meeting. You're going to be getting update on your Gmail. We're going to be sending you mails. When the recording is out, the link will be shared too. And then Mr. Damilare's email will also be part of that mail. All right, so do well to reach out to him if you want to. All right, do well to follow him on his social media page so that you can learn more insightful content. And then do well to also follow us on YouTube. We have a lot of insightful content for you. Then there is a training we're going to be organizing very soon. It's on data analysis, and when that training is out, I mean the flyer, the dates. All right, we're also going to reach out to everyone on um via our email. So you're going to see a message on your mail, pop up on your mail, and if you are interested in learning data analysis skill, you can do well to jump on that. As you can see, Mr. Damilare is a stock analyst, and he has data analysis skill actually, because you can't do analysis without being a data analyst. So being a stock analyst is just like having a niche that you are focused on, apart from just being a general data analyst. So data analysis is a very, very good skill to learn in this age now and in this era that we have. It's very, very good skill. So that'll be all for today. Thank you, everyone. Thank you so much. And see you on the next one. Bye bye.